Ladies and gentlemen, welcome to the December Coronation Interactive Session. The theme for today's discussion is Nigeria, moving beyond COVID-19, opportunities for investors.
Good afternoon, everyone. Thank you for joining us. My name is Wale Famurewa. The outbreak of the COVID-19 pandemic has certainly presented many challenges to governments and businesses across the world. Africa's economy is projected to grow on average by 3.4% this year, after the worst recession in 50 years in 2020. And after Nigeria's economy slipped into a recession last year, slow economic growth, high inflation, and exchange rate instability are amongst many challenges facing investors going forward. Against this background, the Coronation Interactive Session today will examine opportunities for investors as Africa's largest economy moves beyond COVID-19. Some themes that we'll examine today include the economic environment and the investment opportunities that exist on the heels of the pandemic. We'll also look at the impact of fiscal and monetary policy on local and foreign portfolio and direct investments.
You are all welcome to the December 2021 edition of our regular interactive sessions. The Coronation Interactive Session is a platform of Coronation Merchant Bank focused on stimulating discourse on pertinent economic and societal issues. The primary objective of this platform is to widen the ideation process and develop transformational solutions to our common challenges in Nigeria and across the African continent. As I stated during the maiden edition in July this year, we intend to continue facilitating productive engagements such as this with relevant stakeholders across various sectors of the Nigerian economy. We have chosen to focus today's conversation, Nigeria, moving beyond COVID-19, opportunities for investors, around the possibilities within Nigeria's debt market. Since the advent of the COVID-19 pandemic, the global economy has been impacted adversely, and this has resulted in escalating the challenges in raising debt for more developing and emerging economies. Nigeria has not been left out of these complexities. Even though we have successfully raised debt this year, it is obvious that the challenges we face are substantial and have been exacerbated by the pandemic. Nevertheless, opportunities still exist. Our economy has recovered from recession and is on a trajectory of positive growth across a number of sectors with demonstration of positive business sentiment and increased market activity. I expect that today's discourse will guide all of you and provide insights into navigating our debt markets in the coming year and identifying possibilities beneficial for growth and expansion. Permit me to close by thanking our guest speaker, Ms. Patience Oniha, the Director General of the Debt Management Office, who has made remarkable strides in the Nigerian debt market and has graciously accepted our invitation this morning. I also express my gratitude to our panelists, Mr. Bola Onadele Koko, the Group Managing Director of FMDQ, and Mr. Stephen Osho, the Managing Director of Commercial Partners Capital Limited, as well as to each and every one of you, members of our distinguished audience. I wish you all robust and productive deliberations.
In the context of Nigeria, sustainability obviously has become a very touchy subject in Nigeria. A lot has been said about the expanding debt profile of the federal government, and indeed, state governments also have been challenged by a mounting debt over the years. But I think a good place to start to get some perspective is, why does debt sustainability matter in the context of investing, and how does it impact the investment environment? Panelists were introduced earlier, but just so you know, we do have someone representing Mr. Bola Onodele Koko, the Group CEO of FMDQ Group. Joining us today to represent him is Emmanuel Etaderi. He's the Senior Vice President at FMDQ, but also Executive Secretary at FC45 Lagos. Emmanuel, thank you so much for joining us today. And I'd like to pose the first question to you and help us highlight for us, why is debt sustainability important in the context of analyzing the investment environment as we begin to unpack investment opportunities post-COVID-19?
Just to speak straight to Wole's question, it would be nice to look at what that term really means in its most basic context. I think you say debt is sustainable when a country has the ability and decides to meet both its current and future payment obligations without exceptional financial assistance or without going into default. And I make that definition clear because there are some countries like Russia that will say, "Okay, I'll not do it again, come and beat me." They did that, and other countries too have defaulted, but not in that brazen way. You as a country, you don't want to go that route because it has impact. And I'm going to go into the importance of this. Now, when you have debt that's not sustainable, it has a lot of negative consequences on the investment environment. So number one, if you go into default, as I mentioned, some countries have done that: Russia, Lebanon, if you like, Spain, in as far back as the 16th century. That's the first country that defaulted. They've done that. But when you go into default, you have a credibility crisis. If your country has a credibility crisis, its ability to attract investments becomes a challenge. There's impact also, apart from that reputational issue or credibility issue, there's impact also on the individual bondholders from different countries holding your bond. And there's impact, on institutional investors. There's also impact on your borrowing costs going forward. So the reputational credibility angle is very important because, for example, Argentina defaulted in 2001 up till 2012. That's credibility issue still had an impact on the pricing of its debt. So that's more than 10 years later. So there's a strong impact on your country if you default or if you have the potential to default. That is why countries try not to default.
And Steve, thanks again for joining us for this conversation. Let's talk about the impact of perceptions about the sustainability of debt. Here, Emmanuel was just speaking to the direct impact of a default on investor perception. But more so because you are in the financial market and this conversation about debt sustainability has been hanging over Nigeria for a couple of years, perhaps more recently, the last 1 or 2 years. So can you just speak to how you think the perception about sustainability of debt owed by the federal or state governments impact asset prices?
Okay, thank you, Wale, and thank you, the rest of the panelists for having me this afternoon. I think it's very important in the sense that if you go back to the basic definitions that Emmanuel gave earlier, it's quite very important that for every country of every state that is trying to borrow any amount of money, there must be some sort of sustainability in terms of how you can pay back some of the debt structure you're actually looking for or you're trying to raise in the market. And it's very important because we can take, for example, even individual in terms of how we appraise each other's credit rating. If you have someone who comes to you all the time to ask you for money, and you find out that over time, if he promises to give you back the money in the next 1 month or in the next 2 years, there is always a challenge in terms of paying back as a when due. I'm sure if the same bank eventually pays you back and calls back again to you and say he wants to raise money, or he wants you to raise him money, I think you have a lot of problem in terms of extending that same credit to the person. So I think from that perspective, we can look at it in the way that the investors in the global market space actually look at how they want to extend or how they want to participate in any form of issue that is coming through either a subnational, national, or international raise or capital raise from the international market. So it's very important. And a lot of factors have to go into this. You have to look at how much of revenue that country is actually generating or that state is generating. You have to look at the capacity of that country and where the money is going to be deployed to. And those are the kind of reasons that a lot of investors look at. They look at the credit rating of the company, they look at the sovereign issues, they look at the macroeconomic variables of that country, and they put all these things together to actually put in a basket and say, okay, I'm comfortable to actually take a risk on this particular sovereign or on this particular subnational. And that, determines how much investors will look at taking that kind of risk on. And most time people will check, the balance of trade of the countries or the states to be sure that actually they have enough capacity and they not have enough resources to be able to pay back. I think those are the kind of issues that you look at when you're talking about sustainability of a country's debt.
I'd like to pivot away from the debt markets for a moment and hear from you about another risk factor that investors need to contend with, and that is exchange rate volatility. And first of all, maybe you can speak to the type of ideas of investment solutions being offered by banks like Coronation Merchant Bank to address the risk factors relating to exchange rate volatility.
Okay, thank you so much, Wale, and good afternoon, everyone. So you're right by saying that hedge their exposures. And if we look at the market as it is today, there is a product, the non-deliverable forward, that as it relates to the Nigerian economy. And I think that what most banks will do or will offer are similar in terms of the solutions that they provide. Because the solution you're trying to provide for your clients or your customers, is to provide an alternative for them to hedge their exposures. And if we look at the market as it is today, there is a product, the non-deliverable forward, that is anchored on the FMDQ platform. Largely, a lot of clients have taken advantage of this platform. You have an exposure depending on how you read the market. You either decide to buy the NDF or you decide not to. But from our experience, what we've seen is that a lot of clients have taken advantage of this because you're better off hedging your positions anyways. And then beyond the non-deliverable forwards that the market provides, on a bilateral basis, right, between yourself and your client, you could have things like the NXP forwards, which is the net export proceeds forward. Now, this is a highly regulated product, right? To the extent that you have a client base that are exporters, then you're in a position to provide that solution to your client, because what it then means is that you can match the export proceeds from one client to another client who is on the buying side. So the work cut out for you really is just to find the buy side and the sell side. So that is one of the solutions that I think is common to the market and what CMB provides as well. And then if you take it beyond that, I will speak to three products. If you take it beyond that, you would look at the basic forward transactions that you do. Everyone in the market, and I think anyone that is financial savvy, has a basic understanding of forward. So you lock in your exchange rate just to ensure that months down the line, 90 days down the line, you're not exposed to fluctuations or variations in rates. These are just simple products that you can provide to your clients to ensure that from a risk perspective or from an exchange rate perspective, they are hedged. Now, your ability to provide those services would largely depend on your positioning as a bank or what your balance sheet looks like.
Delivering the keynote address for this event is none other than Patience Oniha, the Director General of the Debt Management Office.
The presentation does speak a bit to some of the issues. When I say issues, or sort of amplify some of the issues that were talked about. So if we look at the Nigerian economy, most of us usually think because we rely on crude oil or have relied on crude oil for revenues and foreign exchange earnings, that oil is what keeps the gross domestic product going. But we know that that's not the case. So if we look at the figures from the Nigerian Bureau of Statistics, we will see that the oil sector actually accounted for only 6% of Nigeria's GDP as at September 2021, while the balance is 94%. And we also know that within the GDP, really, the fast-growing sectors are really in the services sector, ICT, largely ICT actually, but that's where growth has been coming from. So we need to begin to look at these other sectors where growth is coming from, while the government is, undertaking various reforms on the oil sector. Again, we know that for many years, for as long as we can remember, I'm on page 3, for as many years as we can remember, Nigeria has been on a diversification drive. So if we go through whether it's Vision 2020 or whatever, Nigeria has been on a diversification drive to grow the non-oil sector of Nigeria, not just in terms of its size, but also in terms of revenue. So some of the diversification we're seeing in GDP is as a result of those initiatives, both for agriculture, mining, information, and ICT in particular. So if we look at 2021, for instance, the growth, so we talk about recovery from COVID, I had recession, yes. Post, we're not in post-COVID yet, but post-recession, we can see that growth has come from the non-oil sector. Okay, so in the next slide, the title of I think the theme of this session is really about the Nigerian economy beyond COVID-19. I agree that we have not reached beyond COVID-19, but we all agree that at some point before Omicron came on, we thought we had exited and could just begin to recover and bring ourselves back up. So let's just provide some statistics official, some of which you would have seen. So as at today, based on information available from the NCDC, Nigeria has had over 217 cases of infections, out of which unfortunately about 3,000 persons have died. Okay, so what happened last year was global, affected practically all the countries across the world. And it is a very great story to say that the projections of the level of recession Nigeria will go into last year didn't happen. And in our own case too, the recession was also not prolonged for long periods as had been forecasted by the international institutions as well as other analysts. Again, looking at the audience, the several things we did, one of which is extremely relevant for this workshop is that we had to redo our medium-term expenditure framework and the budget, both for size. So the share size increased. The borrowing increased from about 1.7 to about 4.6 trillion naira. Okay, so meaning we had to borrow more because we now had to spend on COVID-related issues to ensure that health services are available, that some social palliatives were provided, and more importantly, that government still continued to embark on activities that will create jobs because many people lost their jobs at that time. Most of this was driven by the Economic Sustainability Plan that was launched in June 2020. But while speaking to that as well, we also know that the central bank, through monetary policy actions and interventions, supported that recovery significantly. Several intervention funds were created. Some forbearance was also given for loan repayment. So all of those working together contributed to the recovery of the economy. We do agree that while it is true that we have recorded growth, and that growth has continued up to the third quarter, that the growth is still fragile, that's one. But secondly, we still have a rather high population growth rate. So if you then adjust that for per capita income, we certainly are not there yet. But I think for how Nigeria handled COVID, we certainly should be proud. I believe the WHO or the United Nations actually commended Nigeria for how it affected, how it handled COVID. I agree that we are not yet out of COVID-19. And because of that, if we look at the medium-term expenditure framework up to 2024, we will still see high levels of government expenditure and high levels of borrowing because deficits are high. So from last year, we've been running deficits of 4.6 trillion. This year, we are at over 5 trillion, and that seems to continue up to 2024. So these are some of the effects of COVID on the government's revenues as well as expenditure. So we're talking of investment opportunities. There's direct investments available, and that's the preference of the government because it then means the capital is here for good, not portfolio investment. So the opportunities in agriculture, mining, manufacturing, ICT, oil and gas. And then, of course, there's portfolio investments. I won't dwell on that. But as was noted, the Debt Management Office is active operator in the domestic fixed income securities market, both at the short and at the long end. And we have a variety of instruments that we issue to raise funds for government, to help, to provide investment opportunities as well as develop the market. In the international market, we are also very active. So in both markets, we are happy to say we have sovereign yield curves extending to 30 years. Okay, so I've talked about public-private partnerships, and that's a major focus we are looking at encouraging. So if you look at the medium-term debt management strategy, we have explicitly provided 5% of GDP as room for providing guarantees and other such support that the private sector may require for engaging in public-private partnerships with government. Having them as guarantees helps to reduce the level of borrowing. So all of that is available, whether under Infraco, whether under the presidential initiative, all of those are available. In conclusion, I think one of the things we must do as Nigerians is to recognize that in spite of the challenges that we have, if we remain on the track of reforms and remain committed to developing Nigeria, the prospects are bright for sheer population and the other natural resources we have, the strategic positioning that we have. There are opportunities. So whether post-COVID or now, there are opportunities, and I believe we should be looking at Nigeria positively, even beyond 2023. So it's not just post-COVID, but post-2023. And let me say that one of the challenges we have, which affects direct investments and PPPs, of course, will be security. The government is looking at that. I'll speak to that upfront. It hasn't abated as we expected, but it remains a priority for government to ensure that capital is available, capital is attracted, long-term capital is attracted to support the various government initiatives. So let me quickly say that assure the investors that debt service to revenue is higher than we want it to be or expect it to be or that it should be, but we're working actively on revenues. We're ensuring that there's a limit on debt to GDP ratio. So we're working on all of those. And debt service really is like a first line charge, publicly disclosed in the budget and paid when due. So the risk of a default is nil. I should say it is nil, not slim, but nil. Thank you very much.
So the first question is, how can the DMO secure favorable terms of lending in the international market? The second question is, what role does the CBN's Ways and Means advances play in Nigeria's debt profile? And then the third one is, given the success of the recent $4 billion Eurobond issuance, is there a potential to revisit the international Eurobond market soon?
Okay, thank you, Chinwe. So I can speak to these three, right?
Yes.
Okay, so very quickly, the first question was how can DMO ensure more favorable lending? So I don't know, I'm a borrower, so I want to interpret it from a borrower's perspective. I'm not lending, and I think so are some other Nigerians. So really, we borrow from various sources. Don't forget the Eurobonds, the ICM transactions are just a component of our external stock, slightly above 40%. So we have concessional loans that are below 3%, some 0.75%, some 2.2% from multilaterals and bilaterals. So in the international capital markets, basically we borrow based on the rates that are available in the market. But of course, we can decide we won't go beyond a certain amount if the rate is like this or bring it down. But more importantly, we study the market very closely before we do roadshows, and after roadshows, we then critically with our advisors decide whether we should launch or we should not launch. And in doing that, maybe the support we provide for the private sector there, we know that's the sovereign is a benchmark for other potential issuers. So we're very mindful of that. So that speaks to that, maybe when they want to borrow, but we are not lenders in that market. We are borrowers. Let me go straight to the whether we're coming to the market soon. Okay, so we do have 6.18 billion to raise for the 2021 budget, but our transaction advisors told us 4 billion at once was a decent amount to issue so that the secondary market, how would I say, the secondary market is good for those securities. When you have too much supply, you know what can happen. It can even discourage other investors. So we were looking to going back at some point, but let me quickly say that within 1 week of pricing, the market did head south and is still in that situation right now. So Omicron came, Evergrande had some challenges in the market. So markets are not exactly good to go back now. So I can say for this year, we are not approaching the market. But we're also saying if we don't get that money from the ICM, we certainly can get it from another source. So ways and means, that's a very, very interesting question. So ways and means really, big phrase, but it is really the overdraft granted by the central bank to the government. Okay, that is allowed in the Central Bank of Nigeria Act with a defined limit. The only challenge is that we've exceeded that. So let me quickly say that because it is an overdraft on the government's current account, that is not managed by the DMO. But the situation where we are now is that we've been working towards securitizing it. So when we securitize it, we will get the approvals from the Federal Executive Council and the National Assembly, and you will see it in the public debt stock. So let me clarify, securitize it doesn't mean we're going to issue those trillions of debt in the market. We will convert it to a structured facility at the central bank with a tenor, and if the CBN wants to sell some of those as security in the market, it very well can do that. But it is a large amount, so it can't hit the market all at once. I hope I've answered the questions.
So yes, we've come to the end of this educative webinar. The keynote address by Ms. Oniha provided key insights into Nigeria's macroeconomic and debt landscape from the vantage point of the Debt Management Office, of course. Indeed, there were essential nuggets in there that will assist with better navigation next year, that's 2022. The panel discussion geared towards debt sustainability was equally enlightening. We thank our panelists for taking out the time to share from the extensive bank of knowledge. Mr. Bola Onadele, represented by Emmanuel Etaderi, Stephen Osho, and Iyobosa Suri. Thank you so much. Please look out for the next Coronation Interactive Session. Thank you.
We have now come to the end of the Coronation Interactive Session. We trust that it was an insightful and rewarding experience for you.